What is happening, crypto crew? Get ready for a rapid-fire update because the market is on fire, and we've got the hottest stories that you absolutely cannot miss. In a world that's changing faster than a Bitcoin block, staying ahead means knowing what's next, and today, we're diving deep into the developments that are shaping the future. From groundbreaking statements from industry titans to critical technical shifts, this is your essential briefing. We're talking about massive shifts, game-changing strategies, and insights that could redefine your understanding of this dynamic space. So strap in, because you're about to get the unmissable scoop that everyone will be talking about. Let's get straight into it. The big picture pivot. We're kicking things off with a powerful declaration from a legendary investor who sees Bitcoin not just as an asset, but as a fundamental safeguard against global instability. He's laying out why this digital currency is becoming the ultimate shield in an unpredictable world, and his insights are a must-hear for anyone navigating today's economic landscape. This is a perspective that challenges conventional thinking and highlights Bitcoin's evolving role. Next up, we're getting granular with the technicals. The price action is showing some critical signals, and a major support level is being tested. We'll break down what the charts are saying about Bitcoin's immediate future, exploring the forces that could send it soaring or cause a significant pullback. This is where you'll find out if the recent highs are sustainable or if a correction is on the horizon. Then, we're shifting gears to look at how the big players are making their moves. Discover how major corporations are quietly accumulating Bitcoin and what this strategic treasury management means for the entire crypto ecosystem. This trend is subtly but surely reshaping the market, and we've got the breakdown of its profound impact. Finally, we're celebrating a move towards accessibility. A new platform is opening the doors for everyone to participate in Bitcoin mining, regardless of their technical know-how or initial capital. We'll explore how this democratization is making digital wealth creation a reality for the masses and what it means for the future of mining. You won't want to miss this one. Stick around, because after these essential updates, we'll be breaking it all down. Make sure you're subscribed and have that notification bell on so you don't miss a single second. A digital shield against uncertainty. In a world grappling with shifting economic policies and geopolitical instability, a prominent venture capitalist has declared Bitcoin an essential hedge against bad governance. This bold assertion comes from Tim Draper, founder and managing director of Draper and Associates, a figure renowned for his early investments in tech giants like Tesla, SpaceX, and Coinbase. Draper articulated his vision during a recent CNBC interview, positioning Bitcoin as a crucial alternative for individuals seeking to navigate the significant changes occurring in government policies over time. Draper's long-standing advocacy for Bitcoin is rooted in his belief that government intervention, irrespective of political affiliation, consistently erodes free market principles. He pointed to the perpetual rise in government spending, stating, "Government spending just keeps going up. It doesn't matter whether it's Republican or Democrat in there." This unchecked fiscal expansion, in his view, devalues traditional fiat currencies and necessitates a robust alternative store of value. Contrasting Bitcoin with traditional assets, Draper was particularly dismissive of gold as a primary store of value in the modern era. Unless you want to hold gold, which is like holding onto shells or being prehistoric in your thinking, he quipped, underscoring his conviction that Bitcoin represents a forward-thinking, digital solution. He sees Bitcoin not merely as an investment, but as a fundamental tool for financial sovereignty in an increasingly unpredictable global governance landscape. Furthermore, Draper highlighted Bitcoin's strengthening dominance within the cryptocurrency market. He noted a trend of increasing market share, moving from 40% in the first boom to 50% in the next, and currently standing around 61–62%. This growth, he explained, is driven by a powerful network effect, drawing parallels to Microsoft's rise as the dominant computing platform. All of these smaller cryptocurrencies are experimenting and doing interesting things, and all the great engineers are porting those to Bitcoin, Draper observed, emphasizing a clear, gravitational pull toward Bitcoin. This growing concentration of development and innovation on the Bitcoin network suggests a consolidation of its position as the leading digital asset. As more engineers and projects align with Bitcoin, its utility and adoption are likely to accelerate, further solidifying its role as a hedge against systemic risks associated with traditional governance and financial systems. So, what does this mean for the average investor caught between traditional markets and the digital frontier? Stick around as we break down the technical signals that could dictate Bitcoin's next move. Support under pressure. Will Bitcoin hold the line? Bitcoin is currently navigating a critical juncture, facing significant selling pressure that has pushed its price down from recent highs near $124,000. The $110,000 support level has emerged as a crucial pivot point, with traders and analysts closely monitoring technical indicators to determine the cryptocurrency's immediate trajectory. The market is witnessing a potential correction following a prolonged period of bullish momentum, fueled by a combination of factors including large whale liquidations, institutional outflows from spot Bitcoin ETFs, and a noticeable thinning of trading volume. Technical charts reveal that Bitcoin has broken below a multi-month rising trendline, with daily closes dipping below the $112,000 support band. The price is now actively testing the $109,500 $110,500 range, an area previously identified as a demand zone. A sustained close below the $110,000 mark could signal a deeper retracement, potentially exposing the psychologically significant $100,000 level. Analysts are observing patterns that suggest an Elliott wave impulse completion, indicating a possible ABC corrective decline. Recent on-chain activity has exacerbated the downward pressure. Notably, a single large wallet reportedly offloaded 24,000 BTC, valued at over $2.7 billion, contributing to approximately $930 million in total crypto market liquidations. Further adding to the bearish sentiment, spot Bitcoin ETFs experienced outflows totaling $44 million on August 26, marking the largest weekly withdrawal figure since March 2025. Data from Look-and-Chain also indicates that a long-term Bitcoin holder, often referred to as a Bitcoin OG, has sold roughly 22,769 BTC, approximately $2.59 billion over the past week, diversifying into Ethereum, which has impacted market dynamics. However, amidst these bearish signals, there are counterbalancing factors that suggest resilience. Japanese investment firm Metaplanet continues to show confidence by adding 103 BTC to its holdings, bringing its total to 18,991 BTC, indicating ongoing institutional adoption. On the valuation front, the 30-day MVRV, market value to realized value, rate stands at -3.37%. This metric, falling short of historical reversal points that typically signal undervaluation, suggests that Bitcoin may currently be undervalued on average, positioning it favorably for a rebound should buying interest resurface. Near-term support levels are identified at $109,500 and $108,000, while resistance is noted around the 100-day exponential moving average, EMA, at $110,865, and higher bands at $112, $300, $115, $300. A decisive break below $108,000 could indeed open the door to the $100,000 level. Conversely, a solid reversal and sustained price action above $112,300 might lead to a retest of the $116,000 mark. While the technicals present a cautious outlook, the underlying fundamentals of Bitcoin adoption continue to unfold. What does this mean for the broader market, and how are institutions preparing for the next phase? We'll explore that next, as we delve into the surprising ways major corporations are quietly accumulating Bitcoin. Corporate treasuries embrace digital gold. The landscape of corporate finance is undergoing a significant transformation as an increasing number of companies are integrating Bitcoin into their treasury strategies. This trend, often referred to as institutionalization, signals a maturing market and a growing acceptance of digital assets as a legitimate component of corporate financial planning. Rather than viewing Bitcoin purely as a speculative investment, forward-thinking companies are increasingly recognizing its potential as a store of value and a hedge against inflation and currency debasement, mirroring the sentiment expressed by early Bitcoin advocates. This strategic accumulation by corporations is reshaping the broader crypto market dynamics. Unlike the retail-driven volatility often seen in earlier market cycles, institutional involvement tends to bring a more measured and long-term perspective. Companies are typically acquiring Bitcoin through regulated channels, such as spot Bitcoin ETFs or direct over-the-counter purchases, which contributes to market stability and legitimacy. The process involves rigorous due diligence, risk management, and alignment with existing corporate governance frameworks, ensuring that these acquisitions are strategic rather than impulsive. Several factors are driving this trend. Firstly, the persistent global inflation and the expansionary monetary policies adopted by central banks worldwide have eroded the purchasing power of traditional fiat currencies. This has prompted treasurers to seek alternative assets that can preserve capital and offer potential upside. Bitcoin, with its capped supply and decentralized nature, presents an attractive proposition in this environment. Secondly, the increasing regulatory clarity and the development of robust infrastructure, including custody solutions and institutional-grade trading platforms, have reduced the perceived risks associated with holding digital assets. The implications of this corporate treasury accumulation are far-reaching. It enhances Bitcoin's perceived legitimacy and reduces its correlation with traditional risk assets, potentially leading to more stable price appreciation over the long term. As more companies allocate a portion of their balance sheets to Bitcoin, it creates a persistent demand driver that can absorb selling pressure and support higher price levels. Furthermore, this trend fosters innovation in financial services, encouraging the development of new products and services tailored to institutional needs, such as derivatives, lending, and custody solutions. Analysts suggest that this institutionalization is a key factor in Bitcoin's ongoing adoption curve. It signifies a shift from a niche technology to a recognized asset class. The consistent inflow of corporate capital can provide a stabilizing force, mitigating the extreme volatility that has characterized Bitcoin's history. This growing acceptance within the corporate world not only validates Bitcoin's utility, but also paves the way for broader mainstream adoption, potentially influencing monetary policy and the future of financial systems. As these financial giants quietly build their digital reserves, another revolution is brewing, making the power of Bitcoin mining accessible to everyone. Get ready to discover how a new platform is democratizing digital wealth creation. Democratizing digital wealth, mining for everyone. In a significant move to broaden participation in the cryptocurrency space, PAXMINING has launched a new suite of Bitcoin cloud mining plans designed to lower the entry barriers for individual investors. This initiative aims to make the process of acquiring digital assets through mining accessible to a wider audience, regardless of their technical expertise or capital investment size. The platform offers a range of contract options, starting from as low as $100 and extending up to $12,800, with projected returns that scale with the investment amount. For instance, the highest tier contract suggests a net income of over $8,600 on an initial $12,800 investment, translating to an estimated return exceeding 67%, thereby incentivizing long-term user engagement. The Bitcoin mining industry has historically been characterized by high capital expenditure, rising electricity costs, and complex technical requirements, often excluding smaller investors. PAXMINING addresses these challenges head-on by providing cloud hashing power through contracts, thereby eliminating the need for users to purchase, maintain, or manage physical mining hardware. The platform emphasizes its global presence, operating mining farms in regions with abundant renewable energy sources, such as North America and Northern Europe. This strategic location ensures a stable and cost-effective power supply, which is crucial for consistent mining operations and profitability. Transparency and security are central tenets of PAXMINING's operational model. The platform ensures that all purchased hashing power is directly linked to physical mining rigs, and users can monitor their earnings and operational data in real time through dedicated dashboards. To build trust in a sector often perceived as volatile, PAXMINING employs bank-level security measures, including the use of both cold and hot wallet storage solutions to safeguard user assets. This commitment to transparency and security is vital for attracting and retaining users who may be hesitant due to past issues within the industry. Market analysts view cloud mining platforms like PAXMINING as instrumental in democratizing access to digital asset generation. By abstracting away the complexities of hardware and operations, these platforms enable individuals to participate in mining and potentially achieve institutional-level returns. This trend aligns with the broader narrative of Bitcoin's increasing adoption and the growing demand for diversified, passive income streams within the digital economy. The accessibility offered by cloud mining is seen as a key driver for bringing more participants into the crypto ecosystem. PAXMINING's model has demonstrated strong user retention, with an reported 80% of users reinvesting or expanding their investments upon contract expiration. This high rate of repeat business suggests significant user satisfaction and confidence in the platform's performance and reliability. User testimonials frequently highlight the platform's ease of use and accessibility, underscoring its success in empowering individuals with no prior technical background to engage in Bitcoin mining. The broader implication of PAXMINING's approach extends to the fundamental principles of Bitcoin itself: decentralization. By enabling a wider base of individuals to participate in the mining process, the platform contributes to a more distributed and resilient network, reinforcing the core ethos of cryptocurrency. From the strategic moves of industry titans to the groundbreaking accessibility of mining, the Bitcoin narrative is constantly evolving. And that's a wrap on today's Essential Updates. All right, crypto fam, that's a wrap on today's Essential Updates. We heard Tim Draper call Bitcoin a hedge against bad governance, saw Bitcoin testing crucial $110K support amid whale selling and ETF outflows, learned how corporations are quietly adding Bitcoin to their treasuries, and discovered PAXMINING making Bitcoin mining accessible to everyone. Don't miss out on any of these critical developments. Make sure you're subscribed, hit that notification bell, smash that like button, and follow us on all social platforms for more real-time insights. Your engagement fuels our mission to keep you ahead of the curve. We'll see you in the next one.